Hi there folks, welcome to this week's weekly forecast, Monday the 23rd of August. I just got back from a fantastic 2-week break away with the family down there on the south coast of England, and then we headed up north to Scotland, do some sightseeing in some of the major cities up there. Had a fantastic time. Now back to hit the ground running. Looks as though I missed quite a busy week as well as far as the US dollar is concerned. US dollar has been on a rampage higher, up 1.25% against the euro, up 3% against those commodity currencies, the Aussie and the Kiwi. Looks as though the dollar now is finding a bit of resistance. Dollar is a bit of a double-edged play at the moment. One of the reasons why the US dollar has been grinding higher is basically the expectation that the Fed are going to start tapering back. That's easing back on their bond buying. You've seen some good job numbers out of the US, as you well know. But now you've got the Delta variant spreading across America at quite a rapid rate. Maybe the Fed now are going to be less keen on the early tapering as some of the analysts are predicting. So two factors going on in the US dollar at the moment. One says dollar should go higher, one says dollar should go lower. Who will win the story? That remains to be seen. But of course, all important, Jackson Hole this week. Jackson Hole is when Fed Chair Powell addresses the conference there in Jackson Hole, and he'll be discussing the economic outlook, and he's surely going to mention the Delta variant and natural consequences it's going to have on the economy. So all eyes will be on that later on in the week. More about that in a second. Let's have a quick look then what's been going on last week since I've been away. This green line here, that is the US dollar. This is my momentum meter. You can access this from the ForexSignals.com site, absolutely free. Quite sure how anyone trades the forex markets without using something like this. Green line, US dollar, very, very strong. Coming back early Monday morning, as you can see that little kickback at the end. So the US dollar has been strong. These commodity currencies down here, you basically got the purple line, that's the Canadian dollar. You've got the Australian dollar, that's trading low as well. And of course, you had the New Zealand dollar trade lower last week as well. New Zealand dollar, they were expecting a rate hike, if you recall. But because we had a bit of an outbreak, I think there's about 3 cases out in Auckland, the RBNZ, they didn't raise interest rates. They actually kept interest rates on hold, which is why the Kiwi has come under pressure. Again, there seems to be a bit of a reversal of that play at the moment. So that's basically what's been going on. The pound's been weak. One thing I have noticed though when I got back is normally when you see the US dollar so strong, the most actively traded currency pair on the planet is the euro against the US dollar. So naturally, the US dollar gets strong, the euro should weaken up. Although looking at the chart here, the euro has actually been quite strong despite that strong dollar. That shows me there is buying momentum in the euro. Maybe we should be looking to buy the euro on dips this week. Certainly something we are looking at. In fact, it is one of our trade ideas for this week. Remember, these are just biases. These are not trade signals. You can't go away and trade this. You need to apply your own strategy. But for that very reason, we are looking here at potential now support found in this currency pair. That's resistance for the US dollar because, of course, it works in opposite directions. Support coming in here at the moment. Maybe seeing the euro gain some momentum against the weaker US dollar, maybe giving back some ground into the Jackson Hole, which basically is on starts on Thursday. So looking at support in the euro dollar. Also pound against the Australian dollar is our other pair in the spotlight. Pound has been weak. It's trading quite low against the US dollar, down about 3% as well. Aussie now is finding a bit of support coming in. We had some good Australian job numbers last week, despite the continuation of lockdown. So the Australian dollar has got the bias potentially to trade higher this week. Pound is still looking weak. We like to sell the weak currencies and buy the strong currencies. One of the reasons why I use the momentum meter. It shows me exactly what is strong and weak at that particular time. Okay, so my picks for the week. New Zealand against the US dollar. I just told you about the New Zealand dollar. Heavily sold off on the back of a small outbreak of COVID and basically the RBNZ not moving interest rates. That story hasn't gone away as far as I can see. There's still going to be upward pressure on rates there. It won't be long, I don't think, before the analysts start talking about another rate hike for the next meeting out there as well. In terms of the economy, still looking quite strong, and I don't think that story's gone away. If indeed the dollar does pull back this week, buying the New Zealand dollar, which was sold down 3% last week, could be a move higher. Again, trade this with your strategy. Don't just trade this blindly. That is not trading, that is gambling. Right, New Zealand dollar and Max, he's looking at a natural gas play long as well. For those reasons, I must confess I haven't actually looked at natural gas myself yet since I got back from my vacation, but indeed that is his bias for a long trade. All right, now let's jump on to the screens. Let's look at the economic calendar, what's in store for this week. Also have a look at a couple of charts. Come on, let's go. Okay, so this is the DXY. Now, the DXY is basically the dollar index. It's the dollar pitched against 6 of the other major currencies out there. On your screen here, you'll see the daily chart. Now, what's got my attention here is this candle here from Friday, just gone. Okay, this is a bearish momentum candle. You'll see here that the recent level of resistance, basically up at around this level, it was tested. It was tested. We drove higher as buyers took control of the dollar, and then we hit a high up here, and then the sellers came back in, and we closed lower than that previous level of resistance. Today's candle, Monday morning, is seeing a bearish momentum candle. This shows me now that the US dollar has potentially finding its resistance. That's why I think the big moves you saw in the dollar last week, 3% higher against the New Zealand and the Aussie. You've got 1.25% higher against the euro and so forth. This is why I think there is going to be a correction in there. And I think the next level of support that we should be looking at for the US dollar comes in here at the sort of 92.50 level. That is about, whoops-a-daisy, that is about 100 points from here. So trading dollar to the downside possibly has some mileage this week. Okay, so this is the Forex economic calendar. I think it's really important that you have one of these to hand if you're trading the markets. Even if you're not trading the fundamentals, it can keep you out of trouble. Last thing you want to be doing is trading into a big set of data releases. Now, you can access this by going to ForexSignals.com website. Scroll down to the bottom, you'll see economic calendars, absolutely free, and you can then bookmark that. The correct way to use one of these is by basically looking here down on the right. Anything in red is deemed to be high impact news. It means it's likely to have a bigger impact on the markets. Today, you'll see here we had some data releases out of Eurozone in forms of PMI data. PMI data is Purchasing Managers Index. Basically, it's a survey for the business leaders telling you are they optimistic about the economy going forward. It's a forward-looking leading indicator. Central bankers love a PMI data. Data came in slightly less than expected. You see that because it's been filled in as red. These are the market expectations. This is the actual. The euro didn't react too much on the back of that, came back a little bit, but certainly markets were paying attention to that. We've got some PMI data out of the UK earlier today as well, slightly better than expected. I'm not quite sure why that was targeted as red. It should be green, but that's just the way it is. Sometimes they get that wrong. Right, so what else is up for this week? Well, let's span out for the next 7 days. Scanning down, as I say, not a lot out. The next real sort of big market event maybe will be durable goods later on in the week. It basically tells you, how the US economy is ticking along. Durable goods, that's like your white goods, like your washing machines and your tumble dryers, not your everyday items. Now, if you're looking to change your washing machine or durable goods, unless it's absolutely broken and can't be fixed, you're only going to be starting to spend money on these goods if you're confident about your job and if you're confident about the economy going forward. That's why we love to look at durable goods data to give us a leading view on how people are viewing the economy. So we always pay attention to durable goods. If you're in doubt about any economic release, just click on it. It gives you a brief description of exactly what it is. As I say, the main event this week is going to be the Jackson Hole Conference. Okay, so that's basically going to be on Thursday. It's basically when the Fed Chair Powell will be discussing the outlook, discussing everything from economic policy. He'll be looking at the impacts of COVID, the Delta variant, and so forth. He'll be looking at potentially talking about tapering. Remember they're basically easing back of bond buying. So the markets are basically sitting on their hands this week into that big event later on in the week. And you can see pretty much the rest of the week it's pretty quiet, but we will be paying attention to that. That also carries on until Friday as well. So Thursday and Friday we'll be keeping an eye on that. You've also got retail sales out there in Australia, so keep an eye on that. So say quite light week in terms of economic news. You can access this by going to the ForexSignals.com website. Any questions, just do reach out to me inside our trading room. Okay, so I hope you found that useful. Now, if you want to come and join us on our daily live streams, you can do so. We are streaming live 6 times a day, 5 days a week. You can do so in the description tab below. Now, just before I went away, I offered a promotion offering people a 30% discount for the first 10 that took the ad link below. I'm told that was oversubscribed pretty quickly. So I am going to open up 5 more of those 30% discount codes today. You can do so by clicking the link below. First 5 get 30% off any of our rates. If you want to come over and join us in our live streams, access the momentum meter and many more tools, and over 200 hours of trading education in there as well. Don't forget to subscribe to the channel and all that, notification bells and so forth. If that's not your thing, that's not a problem. I will see you next week. Have a good week. It's good to be back.